Hi folks, Lee Gettess here with the Market Sense. For the week of November 1st, 2016, we're going to look at charts that were provided to us by Gettess and their Trade Navigator software. And looking at a weekly bond market chart here, after a fairly significant drift lower, they seem to be trying to work their way back up this week. I don't know if that's based on fear or nothing happening from the Bank of Japan or what, but they're kind of been either side of the 162.13 area, which is that lower moving average there. That could have acted as resistance, but it does not appear to be. And so that leaves probably, let's call it 163.024 as a likely target on the upside here for resistance, with support somewhere down around 160.24. Now, because this was an outside week, it's not too surprising to see them turn back up without going all the way to support, and getting back above the 62.13 area is actually a rather positive sign. Now, we still have a statement from the Fed Wednesday afternoon and the monthly employment Friday, so closing above this line is certainly not a guarantee at this point. But they look like they've got enough froth to get up, and unless one of those things changes things, probably due for at least a little recovery here, I would think. Could even go all the way back up to 165.10 up in this area. Might be asking too much, but again, we got an FOMC and a monthly employment. Lots can happen. In stocks, well, with all that leading up to the FOMC and the employment reports, kind of surprised they've broken this hard. We were looking at resistance in the 2131 area, which they have just barely failed to reach. If that is an indication of how weak they are, wow, they may not be done yet. You kind of figured a couple points either side of 2110 in this area maybe would hold them, and they've gone quite a bit further than that. I think 91 is the low they got to Tuesday, and I really don't have much of anything else as support till about the 2080 area. Don't know if they'll get there, but they may just be in the middle of nowhere. Fear because of the breakdown they had, and the VIX is higher, so that tends to lead to excess volatility, which makes the support and resistance a little sloppy. It's possible that they could recover all the way back up to the 2150 area here in the upper moving average, but they really look kind of weak. This whole thing has kind of been a rollover thing, and as I've been mentioning, this momentum indicator down here at the bottom of the screen has really looked negative for quite a while now. The momentum staying below the moving average is not a good sign, and even though this was kind of sideways, it kind of indicated that a breakdown might occur. Now, the one positive thing is we're seeing the lowest prices that we've seen since early July. But this also just kind of takes them back into the area of the highs that they made here before this last little drive up. So if they're going to turn back higher, this is probably roughly the area they'll do so from. But I'm not going to tell you they can't go to this lower Keltner channel here at 2025. They can, and they could go lower. But again, Wednesday afternoon FOMC statement, Friday's employment report, I'm sure those are the big drivers for the week. So that's what we've got for you today. I hope you can find something profitable to get yourself involved with. By the next time you hear from me, we will probably be voting for president. Oh, God help us.